Okay. Good evening, everybody. Trust you well. Hope you had an amazing week so far. I know it's just Monday, but yeah, the week is going to be very contested. My name is Tope, as you all know, and it's a privilege to be back with you in Monday, Monday night analysis. Can you all just confirm to me that you can hear me clearly, please? Can you all hear it clearly, loud and clear? Okay. If you can hear me loud and clear, let us get going. Okay, let's get going. Awesome. Okay. First question I'd like to ask. How many of you, took some trade last week based on the analysis that we had? If you remember last week, I was talking about. I spoke about AU, EU, GU, and some of their targets for the previous week highs. And as you can see, we smashed those targets. Those levels were taken nicely before they did some sort of retracement towards the end of the week. So let's hope for another good week this week again. Okay. First off, in alphabetical order, it is our Aussie AUD USD, and okay, let's fix the mic. I hope the mic is better now. The sound is better now. I hope. Excuse me, please. 2 seconds. Hello, guys. Hello, guys. I hope the mic is better now. I don't know what is happening, um, but yeah, I think I might need to swap my machine so that you guys can have a brilliant session tonight without any interruption. Can you please confirm to me? Okay, the sound is still not good. All right, 2 seconds.
Hey guys, Tucker's gonna swap his microphone system. I think there's a problem with it. So Tucker, if you can hear me, you do that for a quick second. While he's doing that, I will just hold the fort down for 5 minutes, and then once he's back, I will hand the session back over to him. So Tucker, if you can hear me, there's a very bad hiss in your background, and I think it's coming from your computer, your microphone. It's like you mentioned, if you swap it back to the other system, that would be great. In the interim, let's see. Quick second, everybody. I'll do the dollar index real quick while he's getting his computer ready. And then he will take over from there. Righty ho. So let's get my charts up. I wasn't planning to need to use them today, but it's good to be a Boy Scout and always be ready. All right, Tucker, the noise is still there. So like I said, if you could change the system, like you said, use the other system you were talking about, that'd be great. I'm just checking your noise and it's still quite bad. Okay, I'm just getting my screen ready to go. Any second now. Okay, so you guys should be able to. Good, cool. Let's just check Tucker's sound one more time. It's still there. Tucker, the noise is still there on your side. Uh, I don't know if you can hear me. Like you mentioned, you might need to shut that system down and start it again. Like you mentioned. All right, so let's go dollar index while Tucker is getting that sorted out, and then I will hand over back to him when he gets in. We apologize for this, everybody. Right, so this is what happened last week. We had a full down week, like I said on Friday. It was the rare week where every day played to a script. There was very little manipulation in the dollar index. You very rarely get weeks like this. Um, but it just played out perfectly. We're not going to go over last week again because we did that on Friday. We reviewed the week behind us. Um, and so this week we're just going to go straight into what we expect to see this week and then go from there. So let's start as usual with the weekly chart. I'm just going to try and clean my chart up and make it as basic as possible so we can start building from there. I apologize. I wasn't prepared to use my charts today, so I'm having to adjust on the fly while we sort out the technical issue with Tope. You know what? Let's just start with a brand new one. How about that? Let's start with a brand new one. So we're going to go, let's see, indices, dollar index. There we go. Template. Let's keep it simple. Right, so hopefully you guys can see the charts now. Let's get this show on the road. So this significant weekly low has been, for now we're going to say rated. We don't yet know if it was a stop raid or price is just carrying on all the way down south. But at this point, it's been rated. So we know that there would have been a nice chunk of liquidity just beneath this, and you can bet your uncle socks. That on a weekly chart, okay, I think we can get Tucker back now, but I'm just going to finish the dollar index and hand over to him. Okay, so it seems okay, cool. Tucker, there's no noise on your end, so if you can get your screen ready, I'll hand over to you once I'm done with the dollar index. Right, so there would have been a nice pool of liquidity there. There is going to be another pool of liquidity lurking around this area as well. This one here. And so it would not surprise me if this downward move carries on till we break that level. We're very close. We are very close. Now, at the moment, that is 93.34. Well, you can actually calculate pips on a dollar index, so that's fine. Now, the moment we break down beneath this level, I would be very surprised if we don't get some reaction to the upside. Toke, just get your charts ready. I can see you and I can see in the system. Just want your charts ready. So I'd be very surprised if we don't see some reaction to the upside. Now, we're not going to try and guess it. We're going to wait for it to manifest and then trade it. But it's something to bear in mind as you look to the bigger picture. Also, if you look at this here, if you draw the fib from there to there, we've gone through the 1618. We've gone through the 1618. And we've come back, in essence, from this to here. That's the swing. We had a 61.8, so that's a live fib retracement swing. It's fulfilled the 1618 target, as you would expect, in which case there's two ways to attack that. The first way is just to go from, well, and we want to see a confluence between both ways. So that's the new retracement or the new expansion leg, in which case this here would be a very nice place for a stop hunt. In essence, we'd expect price, let's throw this away for now. We could potentially expect price to break structure here and make this the one. If it did that, now on a weekly chart, you would this would be the high that drove it down there. So if that is playing out, we don't know for a fact if that's playing out, but if that is playing out, then we would want to see price dip into there and then rally back at least up to here. This, for those of you who were in my free trading group last year, all free things come to an end, unfortunately. But if you were in my free trading group last year, this is what I spoke to you about, building a scenario on a higher time frame. Now, a market maker is not looking at your 1 hour, 30-minute chart. This is what they're looking at. So now there's no guarantee this happens, but this would be textbook price action if it did occur. Also, a nice liquidity profile on a weekly chart to frame that move up here would be that candle's wick. That candle there, right? That sword doji. In essence, we'd probably see this coming here. And then this move rally from there. If you drop down to a daily or 4 hour, you're going to see that that is very likely going to be a clear manipulation or order block. Let's see. Again, there you go. That's it there. So that's it there. So we can refine that to that level there. If you want to be, if you want to be conservative, you would probably just take the entire candle down to the bottom there. So that's a 75, 76, 76 pip zone on a daily chart, which is not bad at all. You could drop down to a 4 hour chart and an hour chart and refine that even further if you wanted to. For the purpose of this, I'm not going to bother doing that. So again, there's multiple scenarios that I'm seeing here. But for the majority of you who are in that advanced with this level or with this philosophy of price action, every week I give you one. Now, you notice some weeks that one scenario doesn't play out, but I still get a trade because I've got other scenarios I'm looking at. But I want to train you to see one at a time so that you can start to get a feel for it. So that's something that could happen. Of course, it could drop all the way down. Let me give you a second one. It could be looking for this liquidity here. That is not outside the realm of possibility for that liquidity pool there. If that's going to happen, what we're most likely going to see is a run down there, then a push back up into that region. So a push back up either, well, let me put it this way. So you can see that, right? And a push back up, come on, into here. Why there? Because there is, so look, let's try this out for size. See if you like that. So that other block there that was violated on the way down will now turn around and become a manipulation block, and then we could see that. So that's scenario 2. Again, this is a weekly chart, so these could all take months or weeks to play out. The third scenario we could see is that it just runs straight down to this level or past that level, and then that becomes the manipulation block, and then that comes down there. These are all valid. However, my preferred option is this one. This is the one that I would like the most, and I also think it's the most relevant. If that be the case, then you drop down to a daily chart. On the daily chart, let's bunch this up so we can see this clearly. In which case, we'd be waiting for this to come down here and give us a daily engulfing pattern of some sort, either a 2-day pattern or a 1-day pattern like a doji or a hammer or something of that sort. And then we're off to the races. Of course, on the 4-hour chart, our pattern, our patent IKW philosophy, IKW bedrock system that underpins all the other things we do is we'd be looking for a 4-hour stop hunt. Now, because we've had a series of drops all the way, there's likely to be a 4-hour, in my opinion, consolidation-ish somewhere between, let's say, I'm just going to guess, between that level and maybe just 1 second. Let's get this down there. So somewhere between here and here, I would expect to see some sort of 4-hour manipulation. So don't take the first move you see. I think this is a week where we're going to have an intra-week manipulation where there's a low that forms. If we are going up, there will be a 4-hour low that forms that is then manipulated for a lower 4-hour low, and then we run off. So it could look something like this. Price comes down here. It looks like it's going. It comes down even further and takes out this one here. Let's get rid of these. Get rid of these. Cool. Comes down even further. In which case, this would be the one. Then we would see a 4-hour 2. Of course, we know that that would then leave an intermediate zone into which we would then expect a dip anywhere from the top to the bottom, but most likely the middle. And this would then be our signal. Of course, if you are aggressive, and Tope has a particular strategy he uses that's aggressive. He's the more aggressive of the two of us. I'm an old man in trading years in terms of the pains of my past. So I like to be slow and steady. But you could get in up here at a 4-hour engulfing pattern of any sort. And I explained what I mean by engulfing last Friday. I don't mean the classical engulfing. I mean any candlestick pattern that reverses a downward range into an upward range or vice versa. So a classical engulfing could be a doji, a hammer, a shooting star, a harami, anything, a marabuzu, anything that reverses price completely over the course of a 4-hour or a daily period. So you could get in here or here at the revisit, if this scenario is correct, we would see this happen sometime tomorrow, Wednesday. Um, I'm going to hand over to Tucker, and I think he's ready, and the technical issues have been sorted. Over to you, Tucker.
Okay, guys. Good evening. You can always never always trust tech. I hope you guys can hear me better now. Um, let's go to the screen. Thank you, Israel, for that analysis on U.S. dollar. But I think the U.S. dollar that I'm working on, the price, the data feed is slightly different. So this is what we can see now. There's a weekly low here that's been taken. The price just ran into. So once that is happening now, who knows? We could then start to see some sort of reaction back up. But we've not seen anything here. So from this point, we'll just be looking for our classic setup. On a hateful stop on, then hateful market structure break, and then we look for an opportunity to come in, taking out an into intermediate low, into an original order block, and then we take off. So, and just like the pattern Israel just drew a couple of seconds ago, so we might be looking for stuff like this to come down, then do that. So this low will be taken as a low, and then a nice market structure break somewhere there, and then a return down and price going up should be ideal. And this first move, the target will be this clean high is here first. This is this two candle high. So and obviously USD, if USD is going long, then every other correlated pair should be going south. Anyway, so let's go back to Aussie that we're gonna start with. If you remember last week, we were looking for continuation up north. Let's go back to our weekly and just see where we wanted to go. So last week we were targeting this high over here to be the first target. Okay. Once we started going up, we were targeting that high. As you can see, we smashed through that level nicely. So this is the next level now. Last week's high is there for the taking. And we have this high over here. Yeah, that high, April, like 2019 high. It's a good place to look for opportunities. So that's another possible target because they're very close to each other. So they know that people will have put their stops at this point here and at that high, last week's high. So they just continue to run it. At the moment, the market, let's go to H4. It's not looking, it's looking like it will continue to take last week's high. That's what it's looking like to me still. So last week we took our last week's high. Um, 2 weeks ago high, we took that high. Now last week, the high for last week is beckoning and it's looking like it's going there. But we'll just be very careful for this daily high. So you might want to take this daily high out because that's what they like to do. They like to do that always. They just know that all the highs and the lows. By the way, I think in some other session we're going to be showing you the best reaction point you're going to find. Are highs and lows, then opens and closes of certain sessions. So you look at weekly and dailies or monthlies, the highs and lows. You'll be wondering why would price reverse at the low of a previous week or at the high of a previous week or at the low of a previous day or the high of a previous day. There's a reason why, and that is just because that's where lots of stops have been, engineered, or lots of breakout buyers have put their, pending orders, and they just simply go there. They trigger them out, and then they're off to the races. So at the moment, this is what it looks like on Aussie. It looks like we're still going up. Um, but I'll still be suspicious of a move from there to this high, then down here, and then a final move up. If we don't, if we don't turn around at this high, to be at this very extreme high before we see any sort of move down. And any of that move to those highs and drop down will correlate. It will correlate with what we're looking at on USD. If you notice, US dollar, we're mentioning that this red line, which is the low from, let me go back to the weekly, the low from July 2018. Okay, July 2018. So if we see some sort of reaction from here, possibly they will take out Tuesday will drop lower than today to take out today's low, and then we start seeing this move up. But we're not second guessing. We're waiting for the market to do what it does, and then we'll just follow the footprint of the big money. Okay, so we're not trying to second guess them. We're just following what the big money is doing. So I can see someone was asking the advantage of analyzing US dollar first instead of performing analysis on USD directly. Um, okay, Israel was kindly answered. He said it is what we call a reference index. It helps us frame a directional bias on the majors and also filters out any potential manipulation on a cross pair. Simply put, so MYKK is just because um, the US dollar is directly proportional or correlated to all the majors. So if it is showing strength, there'll automatically be weakness in the other pair. Okay, that is inversely correlated to. So, for example, Euro USD. If Euro is strong, obviously USD will be dropping, and if USD is strong, Euro will be dropping. So they're directly proportional to each other. If they're inversely proportional to each other. So strength in one is a weakness in other, and USD is the one we check out first, just to give us the directional bias, just like Israel said. So we go back to AUD. I'm sorry, AUD USD. So this move, like we're saying, sorry, let me take that out. If that rally up that we just identified on US dollar happens, which correlates with the drop down that anticipating, we're anticipating on the US dollar. If that happens, then I think uh, um, we're in a good position. We're in a good position. So this is what I see at the moment: a possible rally up, you know, continuing up before we see a final drop down. Okay. So next pair, Euro GBP. 2 seconds. Um, Azariah, Desire. Where's Azariah? I think you want to get the charger for Sorry, please, quick, quick. Okay. So bear with me. I just realized that my other laptop, the battery is low. So they're gonna get me the cable. So we'll look to identify where are we now. So this we're at last week's high. It's a good place for reversal, but we got another high from from we got another high from a couple of weeks ago. Let me get the exact date. So that the last week's high And we've got 29th of June's high. That's another possibility. Price could rally there. So as you can see, Euro GBP we already took last week's high. So we now drop down to H4. If you then see, our preferred setup on the H4, okay, so nothing has happened yet. If you then see our standard setup, so this high is taken out, we come down. If you see the market structure break, we then break down from here. Then we want to see it rally back up to take an intermediate high. This level, then a final push down. Okay, will be a good move. I'll be looking for first targets to be this H4 here, okay, and then this low here should be a weekly low, okay. That'll be the first target if I see this. Okay. So this is what I'll be looking for. So I'll have had stop on of a couple of days. So this is 1, 2, 3, 4, 5, 6, 7 days. If we went on the just see exactly. So I've already taken out last week. So last week's high is taken out. You see, and in fact, 2 weeks ago, was 13th of July, 20th of July, they've both been taken out. We're still looking to see they'll take out 29th of July. At the rate that is going currently, because US dollar, I mean, this one is not, Euro GBP doesn't correlate with US dollar, so we're not looking at US dollar. What Euro GBP helps us to do is once we've seen a move on US dollar, right, we know it's going to directly, I mean, inversely affect Euro USD and Pound USD. So we then want to find out which one would be the best to trade out of Euro or GBP. So now, based on Euro GBP, it will tell you which one of Euro or GBP is going to drop the fastest or heaviest, or is going to rise the fastest or the quickest. Okay. So let me say it again. If you identify strength in US dollar, therefore there's going to be weakness in Euro and Pound. But then you also want to say which one is best to make you trade in Euro or Pound. This is where Euro GBP comes in. That's going to be another kind of session for another day. I don't want to put that into confusion. But if someone can just take a mental note of that, you can ask the question it's also another way of filtering the best trade between your euros and the GBP. Once you found your direction or your bias on US dollar, then use Euro GBP to determine which one of Euro or USD you want to trade. Okay, right. So let's move forward. We're not focusing too much on Euro GBP. Now Euro JPY. Euro JPY. So we go to the weekly as we always do. Find out where the best level. If you remember last week, I said our target was this high, this week's high over here, the 8th of July. I mentioned something like that, and I mentioned this high as well, the high of the 1st of June. Okay, price is looking to be pushing into that level at the moment. I would have also marked this area just in case price came back into that level and give price action. So if we went on the H4 now, we would see what happened from last week. Let's zoom out. Okay. So last week, the 20th Monday, we were here, and we already ascertained that we've already had our setup in place from this week. You know, this low. Those. Yeah, so this low was taken, and then we've seen a market structure break here as well. So any sort of price action that dips back into this purple range and give us some nice price action, we'll be looking to, take this trade north. Okay, and we didn't come as far as I would like, but this trade was already gone because it's quite aggressive. This would have been a good level to come back into, and if you went on to the H1, this level, H1, so this level over here was what I think I was targeting. That if anything came back to that level, I would have loved to take this trade, not to come down this way and then up we go. But it didn't do that. It stopped shy of it. And it used the manipulation bar instead. This one here, stuff of it. Took it. Okay. The other stop, the other area I would have looked to take a trade would have been this daily high over here, daily high. Once price was already bullish and there was a move down, and I saw this H1 engulf, this H1 candle closed above this H1. Yeah, that's a signal for me to take a trade. But because it was Friday, I just let that go. I think I was not even focusing on EJ. My focus was on Euro USD. Um, okay. So for Euro US for EJ, this is what we're looking at now, and we are looking at the week. So the 8th of July has been taken out. Price is currently still running bullish because look at this. Price dropped down into that daily high. Okay, stop onto drop into that daily high. Stop onto this level. Okay, this is a good setup as well. Into that daily candle, get a get a hit into this hit for audible. Okay, stop onto that day into the H4 order block, and also a daily high. So this daily high closing above all this. So each day has been closing above, giving us a signal that yes, we're still looking at a bullish setup entry, and this did something beautiful for us. Price came, took out a daily low, which is also an intermediate low, into a bullish H4 order block. This is a beautiful setup. Okay, it is something you can call a star setup. And as you can see, look at all these highs and stuck together over here. It's quite close together. These highs here, and it's something they call Candyland because that's where we will be putting all the stops. We're putting the stops here, so we can say that this will keep running. Take at least that high out, and then take that June the 8th high, weekly high out before we can start seeing any sort of reversal. Okay, are you all with me? Give me a yes if you're with me. Awesome, awesome. Okay, cool. We move on to the next pair, Euro USD, our favorite, our favorite pair. So we go back on the weekly. Um, I know we had a weekly target that we marked out from last week. I think I gave was this high? Yeah, that high that we're looking at. So that's a good high for reversal. Here's another one here for reversal. Is looking like we're gonna take it. Remember, if you remember very well, I think 4 weeks ago we were here and we found our setup over here. You can imagine how many pips you would have made now if you're able to stick to the analysis and just roll this trade up. So now that we know where we're looking for targets, let's go to the H4. So if you remember clearly, we deciphered, okay, we found this setup. These are the first setup we were taking about 5 weeks ago or so. Okay, short. We were going short. If you guys remember, we went short here. Okay, we went short again here. But then we've already seen a reversal starting to happen. Okay, and I'll show you what we did. If you guys remember clearly, what is it doing? Okay, right. Let me zoom back in. So you would remember we found this level. So we had this stop hunt. We get my rectangle. There was a stop hunt here. Market structure break. And look at that. Price came back down. We were expecting price to come to this level at least. And then from there, we were going to look for a move up. And this level was quite strong. The bulls were quite powerful here. 3 times, 4 times, it came into this level and they never gave that level away. Okay. And then as this was happening, it was giving us more setup within setup because we then had another stop hunt again. Okay. This dropped down into this order block, taking out all these lows, rallied up, gave us another market structure break over here, came back into the H4 order block. Another entry happened over here. Let me get myself some arrows for you. So first entry was here. Second entry was there. Okay. And then we continued. So price came into this level. Boom. Another rally up and off we went. Okay. As price started going up again, it keeps giving us nice setups. So lows taking out market structure. Oh, let me remove it from the drawing mode. Yeah. Don't worry, guys. I know some of you are looking the way that I'm drawing everything and all that stuff. It will become second nature to you. All you have to do is just practice. Okay. I'm not gonna say it's gonna come to you straight away like that. And you have to practice. That one, there's no shortcut to it. You just have to practice. So we can see a stop on happen over here. Price rallied up, broke structure there. We're expecting that it retrace back into any of those levels here, the order block into the in this area, and we saw retrace back into the H4 bullish order block. What you would have waited for price to confirm, so you should have waited for this engulfing on your H4 or on your H1. Okay, H1 will be our entry, obviously because we're using the H4 for our analysis, and then price continued to, just drive up. Okay. And as it continued driving up, it was continuing to give us setups again. So we know we're still up. Okay. And then we had this happen again. Stop on, and then market structure break. After that, what happened? Well, drop back down into what? H4 order block. If you remember last week, we were talking about this exactly this level. We're talking about, this level. Ah, come on. We're looking at the week's high, and look, price dropped down into it and off he went again. So far we've not been able to find any setup on H4 because they've just been aggressively moving up. Okay. If you remember last week, I was telling you we measured all the pips or and the ratios that we could have gotten. So if you got the trade from here or you got it from here, How many pips could you have made now up to this red line? That is 300. Let's call it 370 pips. Okay. So from there, let's say you risk. What's your risk now? All this for the block. Okay. Okay. You risk 50 pips. If you risk 50 pips for 350 pips, that's a ratio of, let's just say, ratio of seven. Yeah, 7 to 1. You risk one, you made seven back at the red line. But price is still going aggressively long. I strongly believe that they want to come to this weekly high. Okay, because I don't think they have any reason to reverse at the moment. Let me see on the daily. Let's see on the daily if there's any daily high and daily order block that they might want to use. Um, yeah. Okay, so we're here. The black line, that's where we are. Zoom in, mid. So at the moment, we can see this daily high over here. Now, I don't think, I don't think for 1 second that there will be more stops at this. Let me change this color to purple. I don't think there will be more stops here compared to this high over here. I believe there will be more stops resting this level compared to this level. And this is just coming based on experience because this didn't really form a swing. That daily high is not really a swing, but this high is over here. It's a swing. So that's where retailers that have gotten this. So maybe they cut this move down and they've been in the trade for a while. This is where they're likely to put their stop. That's why I am a bit more confident that the trade will be moving higher towards that level. And if you remember, in Israel's analysis of the US dollar, that is what is likely to happen as well, because the US dollar still has one more weekly low to take out, unless the weekly low that I'm looking at on my feed um, is going to be the one they're going to use. But if there's no price action, we do nothing. I mean, you don't lose anything. In fact, you save your money if you're not trading at the moment and you're just waiting for the right setup. Okay. So far, there is nothing happening. We're only going to look for USD to do what it wants to do, and we'll see if EU comes to this weekly high, which I believe it will, and then drop down. Yeah, take out. So there should be an intermediate low here. So give us a market structure break, and then come down, give us some intermediate high, sorry, price then come back to take them into this origin that drove the bulk of the structure, and then we can see a drop down. Now, guys, see all these lows over here, okay? All these daily lows here, they all have orders there, okay? They all have orders and stops there, okay? Stops are all at this level. So you can imagine if they've been building up all this stuff for a while, yeah? They've been building it up. So you can imagine how aggressive the next move is going to be. Yeah, it will move. I believe it will move and stay there for a couple of days at this high for a couple of days, and then boom. It might be one day that wipes all this out. Just one move. One day, one aggressive day can take out 1, 2, 3, 4, 5, and then come onto this daily order block here and wait there for a bit. And it carries here for a little bit. Okay? So that's what I see we could be looking that's what we could be looking at on Euro USD this week. Okay, let's go to our next fan favorite, and not GJ, GBP USD. Let's go to the weekly time frame. Same thing. We were targeting this week high for a target when it was moving up. We're there now.
Israel said blame the news. Yes. So that high, okay, that weekly high, um, there's a next weekly high over here, and this level is quite suspect. I don't know how aggressive the move will be to get here. As you can see, it seems these highs over here, they're quite close to each other. They're quite close to each other. So I don't know if they might do some sort of, there might be some sort of craziness in US dollar or news or something come out for GU that drives it to that level. But if we go to the daily time frame, we might see some highs in this area. So exactly, look at this high over here, and that's a closer level. And what is near that high again? We have a daily, we have a daily order block, bearish order block there. So this would be could be quite juicy to be honest, and it will be nice if we see this move go past this high into the daily order block. Yeah, and we see some move down, you know, back down again. This is where I believe we can see something. These two levels. So they will take that high, take it into that daily order block. Let's draw it this daily order block. This is a A star setup. When A star setup, whenever they take a high or a low into an order block, it is always beautiful. Like once you start practicing and seeing this, you would once you see it, you can't unsee it. You know, like it's everywhere. Let me give you a quick example. Look at this. Look at this daily, okay, daily order block. But look at what happened. They took out this high, just just into it. But to be honest, I would look at I would take this beefy candle over here. That beefy candle there will be my own order block. Yeah, it's thicker than the one at the top, so I'll take that one all the way to there. And look at the way they stop hunted that day's high. So they took 1, 2 days high into that order block and boom, drop. Again, look, look at this daily order block over here. Okay, draw it out. What happened? They stop hunted this days into that order block. And then what happened? Boom, took off. Let me give you another one, show you another one. So you have this order block here, draw it out, although it's a very flimsy one. And look at what they stop hunted this day into that order block. Now, are you just going to take the trade like that? No. You wait for price action. Yeah. What kind of price action? You look for your H1 engulfings. Okay. You can look for market structure there as well, but this is the way they do their stuff. It is sweet. These moves are always more aggressive. When they stop on a previous day, previous week into an order block, boom, look at off they go. Okay. I think this would be a good homework for you guys. Can you go and identify? So you'll be looking at a past chart now. Pick four of your favorite pairs or two. Go in the past, identify when they've taken a day or week high or low into an order block. So the first thing I would like you to do is, you're looking for order blocks first, and then you're looking for if they've taken a low into it or they've taken a high into it. Okay, it will be a very good exercise for you to train your eyes to see certain things they do in the market. And once you're able to see that, you will be able to get yourself in a very nice position for some nice picks. Okay, they do this all the time. Yeah, they do it all the time. Is their bread and butter. Look at this again. There's a daily order block here. Let's draw it out. But this one now, yeah, this one that they're taking out now, they're taking out a previous day. They're taking out a previous day low into it. Can you see this? This day, this previous day, they took the low out into this daily order block. I guarantee you, if we go on a H4, you see a H4 order block in here. Okay, and boom, off they went. Okay, off they went. This is the way they roll. Okay, this is the way they function. So I would like you to go identify this setup. Okay, this will be a good training for you guys actually. Be a good training. Once you've done it, just post it and shout at me, and I'll be able to say myself and Israel will be able to look at it and be able to say, okay, yeah, that's a good spot. But the thing about it is, once you spot it, you will never stop seeing it. Once you see it, you can't stop seeing it. But the where the hard work is, it's in identifying these sort of setup. So now you got two sorts of homework. There's not the normal homework is for you to be finding our normal setups of our H4s. When you're on the H4 time frame, we're looking for, look at this, a stop hunt, market structure break, return to the order block, and rallies up. Okay. See, I'd not even looked at the H4 already, but a setup happened on this. So let's mark it out. So we have this H4 low. We'll stop hunted here. There's a market structure break there. If you're not sure, you could have taken, you've said it here, market structure break there, then price drop back into this order block, this H4 order block. Beautiful, beautiful. It tapped on it three times. So first time, second, third time, and then off it went. Okay, this is an A star setup. Okay, so at this moment we can't see any setup for us now to go to do anything now. We're just waiting for price to do his thing. Okay. Another thing that I think it will be in another teaching. I don't want to confuse you guys or anything. Let's just do the normal analysis. Um, I'll pencil that down to show you guys another day. So this is GU. Okay. So this is what we expect. So don't forget the homework. I want you to just go on your daily time frame, identify the bearish and bullish order blocks, find out when they stop hunted a day, a few days into the order block, and then mark it out, mark the order block out, mark the stop hunt out, and then just post that. That'll be a very very good training for your eyes. Are you happy with the homework? Okay, Esther said yes. All right, let's move on. So the Kiwi NZD USD. This will be the last one I'll go through tonight. Past my bedtime. Okay, so last week we were looking at these highs. I think the high that I was looking for, I think this one on the, but we're looking to take last week's high out now. So it will be interesting to see. So we have those levels. And all of this is tying nicely. I keep repeating, is tying nicely to the US dollar. Okay, it's tying nicely to the US dollar. So at the moment, we do nothing unless you're able to do some intraday trading. But the analysis that we have now, okay, the trade that we got on Kiwi was from, I think was, here we go again. Yeah, we had this. I was saying this one, your eyes had to be really peeled, to see this setup. Okay, that was a stop hunt. Okay, if you were not sure about this, this is another stop hunt. Big stop on this one is more obvious. Stop on market structure break. Price rallied up, came back down into the order block over there. Then price moved up from there. Okay, and that's what we saw. We were talking about this on Monday. Monday. Um, yeah, we're talking about this on Monday, and I mentioned the target would have been the weekly high. That's where we're going now. We're almost close to it. So, but at the moment, we're looking to take our last week high. So who knows what could happen? Who knows what's going to happen? We'll wait for price to tell us. I can see this as well. I can see this day low taken out. Market structure one, two. This is not as clean. This structure is not as confident, but it is a good structure taken out. Um, this will be a better one. So I'll be looking for price. If this happens tomorrow, a nice price action there, and US dollar is still dropping, then I would look to take this long again. And we have a weekly high over here. Will be a beautiful target. So that is it for you for Kiwi. For USD CAD, the Loonie. So this is the level that we were looking for last week. I marked out a daily low as well, but this was more precise for me. Looking at this week's low, I actually took this trade, but I left it on Friday. I didn't feel like leaving the trade on Friday. I was definitely looking for this low, and it's going there now. And we have this nice clean low over here. See, when there's a weekly candle and there's no wick above or below it, it's also a good target. Very, very good target. Okay, so let's go to our weekly, to our H4, sorry. Um, yeah, last week when we talking, we just saw our return. We had seen setup. Our setup had already taken place. We've seen that level, that high taken out. Market structure break happened. We've seen our return into a H1, into a H1 level around here, and then the drop has started. Look, so our move was already going down. Let me just show you guys how H1 looked like. Um, so look, so that was the H1 level that we found a reaction from. What made it beautiful was this intermediate highs taken out into that H4 level and that H1 level that we marked out. Okay. So in fact, we had more than one level taken out. So we took this intermediate high out. We took this one out. So we had two. So we had that stop hunt, this market structure break, two, rally back up into the range, okay, where we had our nice, so we had number one, number two, number three level um, marked within our range, our stop on a market structure break. Boom, price smashed that and we were off to the races. And we were targeting this this weekly low. Yeah, we're targeting this low. I was also looking at a daily low. A daily low. Yeah, this daily low. I was looking at this. This is where I stopped trading. Right. I think I took. No, it was here. I took my profit. This one here. When it happened, that was it. Another opportunity to trade would have been this daily high taken out. That's another sort of analysis for another day. But it's nothing it is nothing alien to you. It's exactly what we're showing you on the H4. You could, I mean, Israel. I remember Israel saying this some time ago that you can do the same thing on H1, but that would mean that your entry time frame would your analysis time frame would be H1, your entry time frame would be 15 minutes. You still be looking for intermediate highs taken out into order blocks within the stop on and the market structure break range. So that's where your entry would be. Okay. So if we said, for example, we looked at this level, that daily high, okay, if we were on, let's go to H1, it will look like this in H1. Okay. So this is the high, and then we would have had a stop, a break, market structure break here. So that range, prices return back into it. You see, this way you just need to be like really, really. This is why Israel doesn't like small time frames because they move too quick and they'll give you a lot of headache. So your entry would have been somewhere here. Okay, your entry would have been. Let's go on a 15-minute time frame. So you'd have been looking at this order block here for entry. Okay, so the breaking structure there, price rallied back up. There's a nice order block there as well. This thick one. Okay, this would have been your entry, and your stop loss would have been at the very high over there. And boom, price hit that and it's dropping. Okay, and it's dropping. So, like I said, my target, if US dollar continues the way it's going, target will be last week's low now. Okay, last week's low, last week's low, and during the 15th low. MYKK has a question. Will the stop hunt only happen inside of the order block, or can it go further past the order block? It's a good question. It can go past the order block, but when it does that, it could just there's a higher probability that price wants to continue, in the direction it's been going always. It has to happen within the order block. Within the order block, there has to be that price action of the reversal. Okay, so you don't want to see price go past the order block. It has to be within the order block. MYKK. Okay. So this is the look for USD CAD. So if you've taken this trade, last week low will be a very good take profit, and the next one will be June the 8th low. That'll be a good take profit. Okay. All right. So have you got any questions for me? It's 10:28 now. Have you got any questions? Are we all okay? Esther says no questions. Esther's been on point today. Esther respond most of the time. Okay. If there is no question, then we'll call it a night. MYKK, how many minimum candles is needed to stop to spot an order block? Hmm. How many minimum candles is needed to spot an order block? I'm trying to make sense of the question myself. So not you, myself. Um, I don't know how to answer that. An order block is an order block. An order block is the opposite candle before an aggressive move or before moving in one direction. So, for example, you can see this move up from here. The order block, the cause of that move up is this candle here, the black candle here. So that's an order block. And there's another one here. So the reason for the move up is that bullish order block. Same thing for the opposite side. So there's a move down. The reason for that move down is this. Excuse me, is this order block. Same thing there. There's a move down. The reason for that move down is this order block. So I, so I'm not sure about the numbers you're talking about. Okay. Yes, but you don't want to be spotting this in real time. Okay. If you're relating it to the homework, you don't need it in real time. And in real time, it takes a while for it to happen. Okay. It's not something that is in fact, let's go to real time. So let's go to H4 real time and just identify other blocks. Okay, if this is what you're talking about. So in real time now you can see this price is moved down. The reason for this move down first is this big this bearish order block. That's one there, and then there's another one here. Can you see that move down? That's the cause of that move down. So that's an order block. Okay, in real time, this one, where's the order block? This bullish candle. So you got this bullish candle. Let's go to another pair. USD CHF in real time. This is order block here for sell and order block for buying. This one. Yeah, simple. Very, very simple. UJ, real time. Order block for selling. Order block for buying is not formed yet because we've not seen a rally up yet. Gold in real time. In real time, it's been mainly bullish. So there's order block here. There's an order block here. The reason why you're able to get that is when you see the move out, the aggressive move out. The aggressive move out is what determines if that area is an order block. So in real time, this is it. Yeah, this is it. MYKK said, so we wait for a handful of candles to form, then determine the price movement, and then determine it was an order block. It might be a handful of candles. It might just be one crazy candle from that level. So not necessarily, you know, a few candles. So it could be a few candles, and it could be one candle.
Tope,
So with that said,
can I say something real quick?
yes, please.
Hello,
Hello,
hello.
hello.
Okay, can I just address Kieran's question real quick?
Cool.
So Kieran, when you talk about in real time, you can never have an order block in real time for the fact that let me see. Let me just grab control of the screen for a quick second. So I'm gonna put my screen on. Give me a quick second. My computer's just being very slow. Okay. I need to hijack it from the system. All right. I'll use Tope's screen while mine is warming up. Okay. Cool. We got it now. Right. So you see this chart here. Can you guys see that? Tope, can you see that? Let me know that you can see it on your side.
Yep.
Okay. Cool. So, Kieran, if you look at that last bullish candle. 1 second. We've just lost the screen. All right, so it's back. You don't know whether that's going to form an order block while it's forming. You just cannot know. You can guess. You can anticipate that that could be an order block, but until it forms, you don't know. And it is only an order block, or it will only be an order block when price forms or price comes back and takes out that candle. So in essence, when I talk about waiting for a 1 hour engulfing intraday or daily engulfing on a swing trade, I'm actually saying till an order block forms. So if we were to have a bearish candle that would do this, for instance. So if we had a bearish candle that did that, this, and then price then began to go further south like this. Price then did that, and then that, right? It is only when price has left that level that we would, in hindsight, say, let me change this color, this candle's color. Let's make that red because it's bearish. And that red again. And one more, that red. Right, so it is only after this next candle has formed. In essence, when this forms here, it could be an order block. It could also be a manipulation block. Because if the next candle that forms after this one is bullish and takes out this high, then all that was a manipulation. So I guess the answer to your question in a roundabout way is you only know this was an order block by the time this third candle forms. Then in hindsight, you look back and say, it's like the one in the 1, 2, 3, 4 pattern. It's only after the 2 has formed, you know that the 1 was a 1. In hindsight, you then go back and look at this zone here and say that was an order block. And in case you're wondering, that's fine because an order block is not useful while you're still in it anyway. So this is one of those concepts that you actually only really want to know about in hindsight, because if you try and guess it, if you try to jump the gun, it will burn you more times than not. So this candle here drive the price the other way. The second candle forming lower again then confirms, in essence, this second candle closes beneath that zone. In hindsight, you then look back and say, okay, that was an order block. And if it is a decent order block, you want to see it propel price anyway. So if it's an order block you want to use, you will want to see price push out from it far enough to tell you that a market maker sponsored the move. In essence, it came out real good with great momentum. Sorry, one of my sons just ran into my study. With great momentum because somebody with deep pockets, we call it sponsored the move. Then when price goes back to it, because it came out with momentum the first time, you are sure that somebody with deep pockets is defending that level. That's the word I use. I say defending the level. You then really don't expect it to go too far past halfway the second time. And the principle behind it is that person who sponsored the move the first time, because they're a market maker. Remember, we did the session of market makers. They're position traders. They trade with huge orders. Therefore, very rarely are their orders filled in one go. The principle behind it is the same guy who sponsored the move out the first time didn't get all their orders filled. Because of the size of the orders they needed, they couldn't get all the fills in one go. And therefore, when price goes back to that level, it picks up the rest of their orders and then the move begins. So I want to repeat, please do not try and guess order blocks in real time. First of all, you are going to be wrong most of the time. Because, for instance, this could have been another block here. If you were waiting for another block to form, right, this could easily have been one. This would have been a great candidate to be an order block. But price refused to come through it. Then you say, okay, I know it's the next one. This is what I used to do when I was a new trader to some of these concepts. Okay, so it must be the next one. So by the time this starts to come down, I guess, well, it's the next one because it's almost engulfed. Well, look at what happened. They just tapped into it and then ran again. Then you take a loss there. Then you say, oh, I'm very sure it's the next one. But it's not. So be patient, because you don't need an order block in real time, is the truth. For instance, even if I guessed correctly here that this was the right one, if it's a correct order block, price will come back to it. So why take the trade here anyway? Why take this trade and then sit through all the drawdown, biting your nails and having stomach ulcers, when you could just let the elephant run through your garden? Remember, we keep saying the market maker is an elephant. Let them run through your garden. Don't guess where they're coming from. Let them leave their footprint, right? So the kind of order blocks you want to see, first of all, you do want to see them in hindsight. Secondly, you want to see price reject sharply from it and then go back to it. So it's very okay to see in hindsight as long as you see it on the way on when price is on the way back. And then you step in with confidence and you take the trade if that order block is forming in the direction of a higher time frame bias. So you don't just jump into any order block willy-nilly. You need a picture or a scenario from a higher time frame. For instance, if an order block were to form there, this is the way I would frame it. If it were to form, I would say, well, on a monthly chart, this is a manipulation block right here. Why? Price comes down. In essence, every manipulation block first started out as an order block the other way. Look here. At this point of the chart, this is just a simple bullish order block, right? Price is coming down. This candle reverses through it. And it's a powerful order block. This is another example of how you can tell a market maker order block. You see that this candle takes out both the low. It doesn't have to happen this way for it to be an order block. But when you see an order block that takes out both the low and the high, that's usually a sign there's a market maker involved there. So this month here, tagged, it could be a day, it could be a 4 hour, whatever it is. But this candle tags this one south and it pushes through it north. So that's an order block at this point, right? The moment price drives through it the other way, this is something you'll figure out with time as you become an experienced trader. 6 to 7 times out of 10, the first time price comes back to that level, it will react.
Yeah, it's come back to it already.
Yes, so we're expecting a reaction of some sort in here. This is one of the, I didn't want to say this at the start to fry some of your brains, the newbies, but this is one of the reasons why I'm pretty confident of a short either this week or next week, because even if it still keeps going up north, there will be a short-term reaction. So if this is my monthly, right, I can then step in down from the monthly to the time frame where the monthly is the divider of, that will be a daily time frame, right? And then on that daily time frame, when I see this order block form, if it forms, there's no guarantee it will form, but let's say an order block were to form Tuesday, right? And then Wednesday, and then go back on Thursday. Let's assume after Tuesday and Wednesday, like I said, it's when the candle after the one that forms the order block, when that closes, that validates that was an order block. If say Thursday was then to go back into the order block, let's change that to uh, a green color to show that it's bullish. If Wednesday, this is Monday, we're saying let's assume Tuesday comes down. When Tuesday forms, that we don't trust it yet. We want to see price move away from it sharply. So I would say you need at least one more candle to confirm the price has moved away from it sharply, right? If Thursday was then to bring it back to the zone in this green candle, right? I would be confident taking an order anyway from the bottom to halfway and putting my stop loss on the other side. Why? I have a higher time frame premise suggesting a short is imminent here, and then I then get a bearish order block that forms in that region. So Kieran, for someone like you who is a swing trader or an end of day trader, this could be something you add to your strategy, right? Frame a bullish or bearish scenario on a weekly or monthly time frame. Step down to a daily or no more than a 4-hour and find another block that forms in that region. The other block could form this way. This will be my suspicion of how it forms. It could form this way, right? It would still be valid. And the reason why I suspect it may form this way is that would then mean that we have this 4-hour high here that has formed today. This is actually, so I'm tipping you what I am kind of expecting to happen this week. I might be wrong, but if it forms that way, that would then mean that 4-hour high is then tagged. That will be the one. It breaks structure this way, right? That would be the 2. And that says it would go like this, form the 1, come back the other way to form the 2, right? In this case, the 2 would be all the way down to this particular candle here. You see how the different time frames are overlaying with each other? And then this green daily candle will be what forms the 3 that takes it back into the zone, right? And then we would then see a drop for the 4. Let's get rid of that. We would then see a drop for the 4. Whichever way it forms, this is still the order block. The order block is still the body or the entirety of the candle that was going up before the move down. I hope that answers your question. I hope it provides clarity. And I hope it gives you a signal for this week, which would mean it also gives me a signal. So I'm being selfish there. Talk back over to you.
Thank you. Can you all hear me? Israel, can you hear me?
Yeah, I can hear you. I can hear you.
Yeah, cool. Thank you for the extra clarification. So, Kieran, that's just it. I mean, Israel gave you something. How will I say? That's tangible as well as what I'm showing you. You know, so Israel was saying don't second guess an order block. Obviously, you need to find them in hindsight. You know, that's the main thing. And you can the example is giving you on the daily. The same thing applies to H4 if you're going to be looking at that. Okay. So I've come to the last pair that I was looking at for you guys. And I was asking if you had any questions, and if you didn't, I was gonna call it a night. I think we did a few things all together tonight, so it's been a good one. It's past my bedtime. Just wanted to find out if you guys were all good and there was no more question before we call it a night. Okay. All right. I'm gonna be calling it a night, guys. So from me, um, it's good night. God bless. Stay safe. Don't forget your assignments. Yeah, please. Don't forget your assignments. All the best.